All right, we all know if we want to build wealth, you can't do it investing $100 a month into a mutual fund. Yes, you'll build wealth over the long term, but for those that build wealth so much more faster, they're doing things differently. One of the most common things that you hear is investing into real estate. But investing in real estate can be very intimidating and you can lose your butt in a hurry. So how do people do it? How can you invest into real estate and make money? Well, you can go out and buy properties and that can make you money, but it can also be very stressful. So today I want to share with you what are 8 ways that you can invest into real estate without having to manage any properties whatsoever. Let's find out what these 8 ways are. All right, so if you checked out my other video where I shared the 7 mistakes I learned from a failed real estate investment, you'll find out that, yeah, I was a wannabe real estate investment person. I was hoping to make some money. Thankfully, I didn't lose my butt, but I didn't make anything. But that was a great learning experience. I recognize, like I said, I wasn't ready to become a real estate investor, but that's what led me to the blog and online business and all that fun stuff. But now here, present day, I kind of want to get back into it. And I recognize that you don't have to buy a physical property to become a real estate investor. There are options out there that allow you to become a real estate investor without managing a property and without requiring a lot of money up front. And I know many of you are interested in that because you've been sharing that in the comments. You know that if you want to build wealth, you got to do something a little bit different than stocks, mutual funds, ETFs, and many of you want to invest into real estate. So that's why I want to share with you what are these 8 ways that you can become a real estate investor without managing any property. And let's find out what the first one is right now. All right, the first option you can look at is buying an ETF that invests into real estate. If you don't know what an ETF is, an ETF is an exchange traded fund. Typically, ETFs kind of like mutual funds, but instead of being actively managed, they're trying to track a certain index. The best analogy I can use to think of what an index is when it comes to investing is to think of Major League Baseball. In Major League Baseball, you have the batting average. You know, what is the average time someone is going to get a hit when they come up to the plate? Well, let's just say that the Major League batting average is 240. So that's what everybody in the entire major leagues is batting. Well, if you're batting 300, that means that you're doing better than the average. So what an ETF is doing is like they are trying to find what is that average, what is that benchmark, what is that index, and they're just trying to track that accordingly. So with a real estate ETF, they're tracking a certain market. Now this could be the US market, it could be the international market, so it does get a little confusing, but there are options. So a common real estate ETF that you might have heard of is the Vanguard Real Estate Fund. The symbol of this is VNQ. That's Victor, Nancy, Q is in Quebec. Oh, Canada. So what this Vanguard Real Estate ETF invests into are REITs, otherwise known as Real Estate Investment Trusts. Now I'm gonna have a better definition of what this is later on in this video. So if you are buying this Vanguard Real Estate ETF, you are buying a ton of different stocks that are investing into real estate properties. So the only thing you have to do is just buy the ETF. Now, at the time of this recording, this ETF is trading at about $70 to $75 a share. So you have to have at least $75 if you want to buy 1 share of this real estate ETF. So what could you expect to make on a real estate ETF? So with this Vanguard ETF, it has averaged 6.5% over the last 10 years. The dividend yield is 4.8%. Now you have to keep in mind that back in 2008, 2009, we had a really bad financial crisis that had a lot to do with the real estate market. You might remember that if you lived in the California, Arizona, Nevada, Florida areas. So the real estate index took a hit. That's a bit of an understatement. So that's why you're seeing returns in that 6.5% range. If you carry that out over 15 to 20 years, you're looking closer to 8 to 9%. All right, so we have a rough idea on what we should expect to make on a real estate ETF, but what about fees? So first and foremost, you're gonna have some trading costs in buying this ETF because it is like buying a stock. So whether you set that up with an online brokerage or maybe there's someone local that you want to execute these trades for, there are going to be some trading costs associated with that. As far as management costs, ETFs are going to be one of the lowest that you're going to find. This particular ETF is averaging 0.12%. Yes, that's 0.12% on the management cost. So that's what you're paying annually for Vanguard to manage this ETF for you. Now do please keep in mind that this is one ETF. This is one real estate ETF. There are dozens, if not hundreds of options out there. Another one you can look at is IYR. This is the iShares Real Estate Fund. It's doing basically the same thing the Vanguard Fund is. It's investing into real estate investment trust stocks, which we're going to talk about here in a second. Average return is just under 6%. It hasn't been around as long as the Vanguard Fund. Expense ratio is a little higher, so the management cost is 0.43% compared to 0.12%. So you are paying a little bit more. And that is something to keep in mind when you're looking at which ETF you want to buy. Now, expenses aren't going to be the tell-all, like that's not the only thing you want to focus on, right? Because if you are paying a little bit more in expenses, but you're getting more return, then who cares? I'll pay a little bit more to make more. That makes sense. So where would you buy a real estate ETF? Now, I mentioned you can go locally, and maybe there's an Edward Jones in your office. Maybe you could buy it through a local bank. Me, I'm going to go to an online broker. I'm going to look at some place like E-Trade, Ally Financial, TD Ameritrade. All of these are going to be super easy to set up, and they're going to charge you very little, if anything, to buy some of these ETFs. Now, I don't know the exact transaction cost, but I wouldn't expect to pay more than $15 to buy one of these shares. And most likely it's going to be less than 10 bucks. All right, let's look at option number 2. We're looking at real estate mutual funds. Very similar to ETFs, but the big difference here is that we're not tracking an index. So with a real estate mutual fund, or just mutual funds in general, they're not trying to just keep up with the average or the benchmark or the index. What they're trying to do is do better to outpace what that benchmark is. So we talked a little bit about the major league batting average, and if the major league average is 240, with an ETF, they're just happy to do 240. With an actively managed fund, they're trying to do better than that. They want to bat 280, 300, 350. But with that, you're going to get greater costs associated with that. Now, with actively managed mutual funds, you can see it anywhere from 1%. Some of the international funds are going to be as higher as 1.5%, sometimes 2%. Now, one of the mutual funds that I found that is a real estate mutual fund, this one is ran by Fidelity. The symbol on this fund is FSREX. This is the Fidelity Securities Real Estate Income Fund. Once again, like an ETF, this Fidelity Fund is investing into real estate investment trusts. So these are companies that are buying different real estate holdings. And we're going to talk about that in the next point if you're not really quite sure what a REIT is yet. But you're going to soon know. Just be patient. Be patient. It's coming. So the return on this fund is comparable to the first two ETFs that we talked about. But the big difference is the cost. Where the first ETF was 0.12%, the other one was 0.4 something percent. This Fidelity Fund is 0.63%. So you can see we're starting to get higher on our fees. That's something that we want to watch. Another real estate mutual fund that I looked at had an expense ratio of 1.12%. So this is 1% greater than the Vanguard ETF that we looked at in the beginning. Now, once again, I don't mind paying 1% more, but I better be getting at least 1% more in return, if not 2% or 3%. So you just want to be careful because a lot of times the ETFs and especially mutual funds are just going to crank up those expense ratios and they're going just to take all your return, and you want to make some money, I want to make some money, so don't pay them more than you have to. Now with a mutual fund like this Fidelity Mutual Fund, you're probably going to have to open up an account directly with Fidelity to buy this fund. Now once again, Fidelity does not corner the market on all real estate mutual funds. Just like ETFs, there are a ton of options. And most of the options you can open up an online broker like we talked about, TD Ameritrade, E-Trade, Ally Financial, to buy these real estate mutual funds. If you're not sure which are the best ones to get, what I did, I just Googled best real estate mutual funds and I found a list on US News that breaks down all the different real estate mutual funds that you can buy. So check out that list if you're looking for some good recommendations. But just keep in mind that I didn't recommend this. I gotta kind of say that because I'm a financial planner and these are not my recommendations. These are just recommendations if you want to look at from US News for some good ideas. Don't forget that, please. Thank you. All right, number 3, and I've already talked about this a few times and you're probably still scratching your head wondering, what in the world is he talking about? What is a REIT? What is a real estate investment trust? So what a real estate investment trust is, this is a company that specializes in real estate. And this could be across the board. Maybe it's shopping centers, maybe it's malls, maybe it's hospitals, maybe it's home construction. All we're looking for is a company that specializes in real estate. But just in case I butchered that explanation of what a REIT is, let me give you the Investopedia definition. So a real estate investment trust is a company that owns and in most cases operates income-producing real estate. REITs own many types of commercial real estate ranging from office and apartment buildings to warehouses, hospitals, shopping centers, hotels, and Timberlands. So basically, you know, Timberlands. What is that, like the boots? I used to wear some Timberlands. Timberland. So that's kind of a general explanation of what a REIT is, but there are also some certain criteria that a company has to do to qualify as a REIT. So this is what you have to look for a REIT, and this is why it's attractive to a lot of investors. So to be classified as a REIT, you have to do the following. The company has to invest at least 75% of total assets in real estate assets. They also have to derive at least 75% of gross income from property rent or mortgage interest. Also, they have to have a minimum of 100 shareholders after the first year of beginning. The fourth thing is that they have to have no more than 50% of shares held by 5 or fewer individuals. And the last one, and this is the most attractive one for investors, but they have to pay at least 90% of taxable income as shareholder dividends. So that's why when you look at REITs, they're typically going to have an amazing dividend yield. That's why you saw the Vanguard ETF paying 4.8% on its dividend yield. Now with the actual REIT stocks, you're going to see typically higher than that. You're going to see 5%, sometimes as high as 7, 8, sometimes even 9%. More aggressive ones, I've seen them in double digits. Now keep in mind, if you're seeing a higher dividend yield, you're going to see a lot of volatility, a lot of a major roller coaster ride in the stock prices to get that. You know, higher yield typically means higher risk, so just be prepared. That means you better buckle your seatbelt. Hold on, baby, hold on. All right, so we talked about with the ETFs and the mutual funds, how they are buying REITs. So these are companies that specialize into real estate. So you can buy the ETFs or you can buy the mutual funds, or you can actually buy the stock itself or buy the company. Now, once again, there are hundreds of different stocks or companies that are classified as a REIT. Just to give you an example, one is Kimco Realty. The symbol is KIM, short for Kim. That's a good name. I like Kim. It's easy to remember. As I mentioned previously, a real estate investment trust company can invest in different types of real estate. So what Kimco Realty focuses on is shopping centers. So if you've ever been to a shopping center, had a Starbucks or a Panera Bread or any type of like a Dunkin' Donuts, most likely Kimco Realty might own that strip mall. So that's what they focus on. And there are tons of other different type of real estate investment trust companies that you can invest to as well. All right, number 4. So we talked about REITs, and maybe for some reason you don't want to invest into REITs. Maybe they're too scary for you, too risky. You don't like getting that dividend yield. You don't like the volatility of the stock price. Another option you have is investing into companies that maybe sell real estate. So one example of that is RE/MAX. RE/MAX is a company that helps you sell your house or helps you buy your new house if you're trying to move. Or maybe you have a commercial property that you need to sell. So companies like RE/MAX are another way that you can invest into real estate without managing any property. All right, number 5, we're looking at companies that are not managing real estate properties. We're not looking at companies that are helping selling your home or buying your home. We're looking at companies that are building new homes. So one of the coolest things that we've noticed once we moved to Nashville is that there is construction everywhere. Even in the subdivision that we live in, I mean, there are building like 4 or 5 houses on our street right now, and they have like 50 more lots that they're working on. And this is pretty well true throughout Nashville if you drive around. Now, one of the companies that I've noticed that has their sign on the interstate is Pulte Homes. So with Pulte Homes, and I might be mispronouncing that, I apologize, Pulte, whatever. So with Pulte Homes, they focus on new construction. They're based out of Atlanta, Georgia. So if you live in the Southeast, you might have seen their signs. You might be living in one of their homes. So if you want to get involved in new construction and new development in real estate, then investing in a company like Pulte is going to check the box on that. Now, Pulte Homes is one of 100 different home construction companies that are operating across the U.S. So just keep that in mind. Do your research and make sure that you know what you're getting your money into. Oh my gosh, I need to take a break. Man, that's a lot of talking. Glad you stuck around though, because the next 3 are my most favorite. Refreshing. All right, the first 5 that I've mentioned don't really require a lot of money to get started. You know, buying an ETF for $75 a share, buying a stock for less than 100, you can do that. The next two options require a little bit more money up front if you want to get started. The next one though is actually a cool one that I plan to do. A good friend of mine pulled this off. So what this is buying a real estate property, so buying a home, buying an apartment complex, but not having to actually manage it because you are hiring a property manager to take care of it for you. So this one not only requires some upfront capital, but also requires some good connections. So let me share a quick story. A good friend of mine, his name is Chris. He lives up in Canada. He does visit the US. He's a musician, so he travels a lot. And he got connected with a realtor that lives close to me. And this realtor also focuses on investment properties and helps other people that are interested in real estate investment properties. So my buddy Chris, who lives in Canada, gets connected with a realtor here in the Nashville area, and they find a property in Clarksville, Tennessee, which is about an hour north of us. He puts in an offer, buys the house, it gets accepted, and now he owns this piece of property. And the realtor friend hooks him up with a property manager to take care of everything. So the property manager takes care of collecting the rent, making sure everything gets fixed that needs to get fixed, and my buddy Chris doesn't have to do anything. And because his other businesses are doing so well, he's gonna pay this property off like in 3 years or less, which is awesome. So just wrap your head around that. Chris lives in Canada, buys a piece of property here in Tennessee, and now he's gonna have that paid off in less than 3 years, and he doesn't have to do anything, and he's going to be collecting the rent checks. Can we just all agree that Chris is a baller? Holla. But the only way that Chris wasn't able to do that because he got connected, in this case, with a realtor that hooked him up. And these possibilities, these options are out there, but you have to make the right connections. So with my buddy Chris, he's a musician. The realtor friend, he's also a musician, so that's how they got connected. And I'm supposed to have lunch with this guy here soon, so I'll let you know how that works. But my buddy Chris isn't the only one that I have encountered that has pulled this off. But it does require some money. You know, he had to come up with some money to put the down payment on. And once again, he had to have that right connection to be able to find that property, because he's not gonna be finding properties in Tennessee when he's living in Canada, but he had the right contact to make it happen. All right, number 7 is one that I can say that I have invested into, and this is a private real estate note. So similar to my buddy Chris, you have to have a good contact to make this happen. So before I moved to Tennessee, I had a good friend of mine that was a real estate investor, and he did it all. He flipped houses, he rented them out. I mean, he did everything. What he also started was basically like a private real estate fund. So what he was looking for were investors like myself to give him money, and then he would go out and buy these properties and either flip them or rent them, and then it all went into a big pool. So the attraction for me was I was gonna get a good dividend yield, paying me 7% interest. I did have a piece of the property that I bought, so I had to sign the paperwork. So if something happened, I would get the house. So there wasn't like a risk in losing all of my money there. So that was a good thing. Like I said, for this one to work, you gotta have that connection. You gotta have a realtor, you gotta have a buddy that's a real estate investor to make it happen, but it can be an attractive thing because I'm just sitting back and collecting the dividends. All right, we're on to the last one, and this one is my favorite because it's probably gonna be the easiest one, and I think you're gonna like it too. So imagine being able to invest into real estate and never have to leave your home. You can be chilling out in your pajamas on your laptop, and you can get started for as little as $500. So what I'm talking about here is online real estate options, and my most favorite right now is Fundrise. So Fundrise is an online platform similar to like Lending Club, peer-to-peer lending, but we're not investing into notes or we're not loaning anybody money. What we are doing is pooling our money with other real estate investors all across the US that, like you and I, want to make money in real estate, that we recognize that you can make money in real estate, that a lot of wealthy people make money in real estate, but we don't want to manage properties. We don't want to go out there and drive around and try to find a good investment because we can lose our butt. So with Fundrise, they are a private real estate investment trust company. So we talked a little bit about the publicly traded REITs. So with a company stock, with a publicly traded stock, they have to report all their numbers. They have to report everything to the SEC so everybody knows what they are buying and selling. Now, there are some good things about that, but I think we can both agree that the people that make a lot of money, the ones that are super wealthy, they're not sharing all that information with the public. They're going out and finding those private deals, private equity, private real estate deals, and that's how they're making money. So with Fundrise, they are a private REIT and they invest in all over the country. You can do East Coast, West Coast, or the Heartland right in the Midwest. And the best part about Fundrise is that it doesn't take a lot to get started. You can open an account with $500. Now, they're not the only online real estate investment company that's out there. There are other competition like Realty Shares or Rich Uncles. But what I love about Fundrise is that you don't have to be an accredited investor to open an account. And if you don't know what an accredited investor is, then most likely that doesn't apply to you. But basically it just says that you can't invest with the other companies if you haven't shown that you have a net worth of at least $1 million or making $250,000 per year. I'm not sure if my details are right on the accredited investor, but I think you get the gist. I was so excited about Fundrise that I had to open an account for myself. Check out my video review where I show you the behind the scenes look at me opening up my first Fundrise account, and also all the things you need to know about Fundrise and how you make money, how much they charge, and how much you can expect to make. I mean, come on, if we can invest in real estate and not have to leave our house, that's pretty legit. But I'm curious, have you ever considered investing into real estate? Have you tried like me and maybe had a real estate investment that didn't quite work out? Please share in the comments below. And if you are interested in trying any of these strategies, I wanna know which one appealed to you the most. Is it the real estate investment trust? Is it ETFs? Is it mutual funds? Is it Fundrise? Is it one of these online options that allows you to become a real estate investor without leaving your bedroom or your living room? That's pretty legit. All right, if you like this video, you know what to do. Give me a like, and if you haven't subscribed, be sure to subscribe and hit that notification bell so that you know when the next video is coming, because guess what? It's coming whether you like it or not. This is Jeff Rose reminding you that it's your money, your life, and only you can make it awesome. That's right, peace out, take care. The symbol in this one is FRSEX. Nope, that's not it, that's FR-sex. The symbol on this fund is FR. I really want to spell sex right now, apparently. Dear Lord. Oh my gosh. Just do that again.